Let's get some more perspective here from Valerie Grant, Senior Vice President and Senior Portfolio Manager in the Equities Department over at AllianceBernstein. Valerie, welcome to the big show. Glad you could be with us today.
Thank you for having me.
Absolutely. Let's start off here with, I guess, what you can call maybe a rotation of some sort. And I'm curious as to what you think investors are looking for here, because we see a lot of stocks being bid, others being sold off, and it's not quite clear maybe what people are trying to pick up.
Right. So there's definitely a lot of volatility in the market right now, and many of the sectors that underperformed last year are really rallying. This is part of somewhat of a rotation from growth to value, and I think it benefits investors to stay relatively balanced in that regard. Some of the ways that you can benefit, I think, from this rotation is looking at industrials, perhaps also financials, and some people are looking at energy, although I'm a bit more skeptical there.
Talk to us about your skepticism, Valerie, because energy was the best performing industry group last week, or week before that. You're seeing oil down today, but in general has been on a tear thanks to OPEC+. What are your reservations around energy?
Well, energy has been on a tear very recently, but if you look at energy stocks over the long term, generally they have consistently underperformed the market. And I think we're at a time right now when, given the focus on climate change, it's very difficult to forecast with any level of confidence what the future cash flows of these oil and gas companies are going to look like. So that's why I'm skeptical. I think that there's a lot of uncertainty in the future cash flows. And in addition to that, my sense is that there's a lot of geopolitical risk, which is very difficult to forecast inherently as well. So it's just where you want to pick your bets. I think there are other ways to play this rotation.
Valerie, go cross-asset with us, if you will. Within your world of equities, what cues are you getting from rising bond yields, from recent dollar strength?
I'm sorry, can you repeat that, please?
Yeah, what cues are you getting in cross-assets like rising bond yields, recent dollar strength? What cues is that giving you in your world of equities?
Okay, so that's really what is fueling, if you will, this rotation from growth to value, right? Because if you have more long duration assets where the future cash flows are further out in the future, right, then that makes them more vulnerable, if you will, to a rise in rates. So that's really what we're seeing. And some of the opportunities, if you will, are in the consumer discretionary sector, where there were a lot of stocks that were very beaten up and you know, almost taken for going to zero during the work from home and e-commerce dynamic that we had during COVID-19. And not that COVID-19 is over, but as people look at it on a forward-looking basis, many of these consumer cyclical stocks actually are performing quite well.
When you look at some of the discretionary names out there, the ones that could potentially benefit from all of us sort of getting back out there in society, are we looking towards the names that maybe also weathered the storm during COVID, or should we maybe look at some of those companies that really did sort of hit the mat during the crisis and have the potential to rebound?
Right. Well, I think certainly the hospitality and leisure sector is one to begin to take a look at. Quite frankly, brick and mortar retail. Burlington is a stock that we have owned for quite some time in our portfolio, and it was hit really hard, as were other brick and mortar retailers during the pandemic. They have virtually no e-commerce exposure, but as the economy begins to open up, the brick and mortar retailers that offer a very strong value proposition to customers really stand to benefit. I also think that off-price retailers and other retailers that cater to the low and moderate income segments of the economy will benefit from the fiscal stimulus that has just been passed. So I think it's important to look at those dynamics as well.
Talk to us again about financials. You were just saying how about that being an area of attraction, and I'm looking at KBW Bank, that is bank index that has really outperformed of late. How many more legs does the banking risk on and investment opportunity still have, Valerie?
I think banking and financial services broadly defined is attractive. So you have the traditional banks, you also have asset managers, the payment processors, and all of the companies that sort of support the financial ecosystem. And so I think there's a lot of ways to look at financials, but it's important to look at it holistically and not just focused on the narrow definition of the big banks. But I think there's opportunity in other subsectors as well.
Valerie Grant, really great to have some time with you today. Thank you so much. Stay well, Senior Portfolio Manager at AllianceBernstein.